Pharmaceutical giant GlaxoSmithKline is looking to grow its business via a mixed series of innovation and wider product coverage. We asked Ramil Burden, the Vice President and General Manager for GSK Pharmaceutical for Malaysia and Brunei, on how he expects to transform the Malaysian business going forward. So Ramil Burden, thank you so much for joining us for the interview. And I wanted to ask you about your recent appointment to GSK Malaysia CEO. What is your strategy that you are putting forward for the company?
Thank you very much, and it's great to be on your program. Our strategy really in Malaysia, as it is in most of our emerging markets and Asia Pacific, is really to drive innovation and access. So all pharmaceutical companies, or research and development pharmaceutical companies, are focused on innovation, so bringing new medicines and adding value to patients' lives. That's really important, that's the lifeblood of what we do, but also we want to couple that with access. So what we mean by that is making sure that ever increasing numbers of people can afford our medicines and have access to our medicines. So our strategy is that. So you can see, for example, in some of the new medicines that we've launched, which really bring additional value to patients, some of our lung drugs, for example, we're launching them, which have additional benefits, but at the same price or hopefully lower than the ones that currently exist. So that's really our strategy, and that's really our growth strategy.
Right, okay, now your experiences in Africa seems to be tremendous, and what opportunities and challenges do you see in Malaysia as compared to the African region or other regions that basically have operations?
So there's quite a lot of differences, I would say. So Africa is very much underdeveloped in terms of the market and in terms of capabilities, in terms of things that are really important, like supply chain, compared to a country like Malaysia. Malaysia is in my eyes anyway, is very close, if not officially, a very developed market actually. Much more like a European market than an African market. So there are very big differences between the two, I would say. The challenges in Africa are really big geographies with very sparsely populated populations, and really, so how do you get medicines from centres of populations like Nairobi, a capital city, all the way out to places that are hundreds of miles away and very thinly populated. You have some of those challenges in Malaysia, but Malaysia is much more developed, and so a 30 million people in an area that is a lot smaller than your typical large African country, and are much more developed as well. So the capabilities here are much more developed. Supply chains, cold chains, so you need a cold chain to ensure the integrity of vaccines, much more developed here. So much easier in that respect.
I see, okay. Now earlier you talked about growth, and growth you mentioned earlier is a little bit stagnant, but in 2014 from the SSM we saw that results, revenue dip a bit, but net profit seems to jump a bit by 26%. What cost-cutting measures have you implemented, and what will you see as earnings outlook forward?
So you're right. So the past 18 months or so have been much tougher. There's a whole range of stuff going on, particularly around the macroeconomic environment. Actually, I think we're seeing a much more stable environment going forward. So that's why we've returned to growth this year. So our top line growth is very healthy this year. We're also doing a lot, as I said earlier, around just changing the way our business model works. So, how do our medical representatives operate? What value do they add to the discussion when they're talking to doctors? How do we bonus them? So we've done quite a lot of restructuring, quite a lot of changes to that business model, and so for the past 2015, 2014, you'll have seen quite a change in the model compared to now. So the model now, we think, is really bedded in. So we've changed lots of things, and also, by the way, we've changed one really important thing, which is removing the perception of conflict of interest with doctors by making sure we don't pay them to speak about our medicines to other doctors. So we've done all of those things, and they've all been embedded in our business now for the past 6 months, for some of them longer, and that's why you can see a return to growth now. So it's not just restructuring, it's actually the whole evolution of the business model to get us back to growth. And I'm really pleased actually that we can see the benefits of that new model really working here in Malaysia.
Right, okay. Your earnings are driven by three business: vaccines, pharma, and also the consumer healthcare products. What are the mix of these portfolios, and what do you see to be the continue to be the major earnings growth drivers for the company?
So for GSK globally, pharmaceuticals is about 40-50% of the business. Vaccines is about 20% of the business, and the rest is for consumer. So a very balanced business, very different to 10 years ago when the pharmaceutical sector pharmaceutical business would have been 60, 70, 80% of our business. So very different. Here in Malaysia, it's roughly the same kind of proportion. So we have a strong vaccines business, we have a strong pharmaceutical business, we have a strong consumer healthcare business. Actually, if anything, our consumer healthcare business here in Malaysia is a bigger proportion of our total than globally, just because some of our legacy brands are extremely well loved here in Malaysia, and very well known. You know, brands like Horlicks, Sensodyne, etc., etc. So we have a much if anything, we have a stronger consumer brand here than globally. But going forward, all three of those businesses are growing and will continue to grow and contribute to our top line.
Right. Okay. And in terms of, Malaysia is one of the signatory in the TPPA, the Trans-Pacific Agreement, and some academics and even NGOs have argued that this, would increase the medical prices. What is your take on this?
So I just don't understand that, to be honest with you. I don't. When I look at my business, we don't think about that at all in terms of medicines and prices. I mean, the standards set out, as I understand it, in the trade agreement are the same standards that Malaysia have anyway. So there should be no difference in that respect. And then I think the stuff that drives prices, competition, etc. They're all extremely strong here in Malaysia. So no, I don't think, as from a business point of view, it should have any impact at all on the price of medicines.
It seems that amid all the uncertainties and chaos in the world economy, GSK is committed to continue the path that it has already set out for itself.